All right, today we're cracking open the details on a pretty interesting upcoming IPO. We're talking about ExcelSoft Technologies. Now, this isn't some brand new startup. They've been in the educational technology game for more than 20 years, and they've just filed the paperwork to go public. So let's break it all down. So what's the story here? Is this just another tech company hitting the market, or is this a really big moment for a seasoned player in the edtech world? Whether you're into tech, education, or just looking at the investment scene, this one's worth a closer look. Let's get into it.
Okay, here's our game plan. First, we'll get to know the company itself, who they are and where they came from. Then, we'll figure out how they actually make money. After that, we'll dive into the financials, check out the market they're playing in, look at the potential risks, and finally, we'll pull apart the IPO itself.
First things first, let's get the backstory on this company. Who exactly is ExcelSoft, and what's their journey been like? So, ExcelSoft is definitely not the new kid on the block. They were founded way back in 2000, based out of Mysore, India. That means for nearly a quarter of a century, they've been building and selling education technology all around the world. Looking at their timeline, you can see it's been a long, steady climb. After getting started in 2000, a really key moment was in 2017. That's when Vedanta Technologies bought a big stake, which basically tightened the founders' control over the company. Fast forward to today, they're winning awards and, of course, filing to go public. It's a huge new chapter for them. Okay, so we know they're an established player, but how does the business actually work? How do they make their money? Let's decode their business model. Their business really stands on four main legs. They do assessment and proctoring. Think digital exams. They have learning management systems. They offer custom tech services for educational clients, and they also design learning content. This four-part approach gives them a really wide reach across the whole edtech world. One of their flagship products is Saras. You can think of this as their all-in-one super platform for tests and exams. It's used by pretty much everyone, from universities to big companies to professional groups that need to certify people. It's a really critical part of their business. And on the other side of the coin, you've got Enabled. This is their learning experience platform, or LXP. This is the engine that powers online courses and corporate training programs. It's a huge deal for schools and companies looking to run their learning online. All right, enough about the products. Let's get to the good stuff, the numbers. How is all of this translating into actual financial performance? The big headline number for the last fiscal year is their revenue from operations, which came in at over 2.3 billion rupees. That right there gives you a really solid idea of the company's current size and scale. Now, looking at the trend over the last 3 years, it's a pretty interesting story. You can see that revenue, the top line, has been growing steadily, which is exactly what you want to see. But look at the profit. It took a dip in fiscal 2024 before bouncing back pretty nicely in 2025. That kind of pattern suggests they might have been investing heavily or maybe hit a snag that year. But the key thing is, they recovered. And where is all this revenue coming from? Well, this is a big one. The business is heavily, and I mean heavily, tilted towards just two countries, the US and the UK. Together make up over 70% of their revenue. So while that shows they have a strong presence in those big markets, it also means they're really dependent on them. So let's zoom out for a second. What's going on in the wider world that could help or hurt a company like ExcelSoft? Let's take a look at the global edtech market. The big picture here is that the software as a service market, the whole subscription model, is absolutely booming. It's the foundation for what ExcelSoft does. And that push for digital transformation, especially in Asia, is creating this massive tailwind for the entire industry. And if we get specific to edtech, there are a bunch of horses pushing it forward. Since the pandemic, e-learning has just become normal. You've got AI making tests smarter, and companies are always needing to train their people. All of these trends create more and more demand for the exact things ExcelSoft sells. Okay, but it can't all be good news and tailwinds, right? Every business has challenges. So let's get real about the risks and the competition they're up against. This slide really gets to the heart of the matter for them. On one hand, their biggest strength is these deep, long-term relationships with huge clients like Pearson. That means stable, predictable money coming in. But on the flip side, technology moves at lightning speed. If they don't keep up with things like AI, those stable relationships could be at risk down the line. And there are three other big risks to watch. First, their intellectual property, their secret sauce. They absolutely have to protect it. Second, the people problem. Keeping talented employees is tough, and their junior-level attrition hit over 18% in fiscal 2023, which is not insignificant.
And finally, because they're so reliant on those international markets, any global economic trouble could hit them hard. So, who else is playing in this space? Well, their IPO documents list a few other publicly traded companies in India. Now, they aren't perfect one-to-one comparisons, but looking at their valuations can give us some really important clues. For example, when they filed, MPS Limited was trading at a price-to-earnings ratio of about 35, while Saskin Technologies was closer to 20. These numbers act as a kind of benchmark, giving us a ballpark for how the market might value ExcelSoft. It's a huge piece of the puzzle for any potential investor.
And all of this brings us to the main events, the IPO itself. Why are they doing this now? And more importantly, where's all that money going to go? So, they have a very clear plan for the cash. The biggest slice, over 392 million rupees, is going straight into beefing up their technology and infrastructure. Another 250 million is for literally expanding their physical footprint in Mysore. The rest is set aside for paying down some debt and just general corporate needs. The takeaway here is pretty clear. This IPO is all about funding modernization and future growth. So there you have it. After more than 2 decades flying under the radar as a private company, ExcelSoft is stepping into the spotlight. They have a solid client base, they're in a growing market, and they have a clear plan for the money. The big question for the market and for anyone watching this is simple. Is this edtech veteran really ready to kickstart its next big chapter of growth? We're about to find out.